Hello everybody and welcome to my monthly Vietnam update. This time from Davos in Switzerland with a chilling temperature of around 5 degrees Celsius. In July, the Vietnamese stock market received robust backing from local retail investors who were enthused by the positive macroeconomic indicators, leading to an upswing in investment sentiment. As a result, the VN index surged by an impressive 9.11%, reaching 1,222.9 points and surpassing the critical 1,200 level, which marked a significant milestone for the market. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. The improved GDP growth in the second quarter, rising from 3.3% to 4.1%, was accompanied by other favorable support measures such as rate cuts, credit line expansion, tax incentives, a reduction of the VAT, infrastructure projects, etc. These developments boosted the confidence of local individual investors, leading to the opening of more than 100,000 new stock trading accounts in June alone. Additionally, the State Bank of Vietnam's continuous reduction of key interest rates provided solid momentum to the stock market, with 12 months deposit interest rates at commercial bank dropping from 12% to around 7.5% to 8% per annum. All those events significantly bolstered the stock market, and liquidity continued to improve, with an average daily trading value of around $722 million in July. Also, from a chart technical perspective, the VN index appears to be in an attractive position, indicating potential further upside in the long term. During July, many listed companies reported their quarterly results, and according to our calculations, the earnings growth of listed companies in the second quarter reached -2.6% year-on-year. Notably, the earnings growth of the AFC Vietnam Fund exceeded 10%, far outperforming the index. The impressive earnings growth was primarily driven by the insurance sector, which contributes around 25% to our portfolio. By the end of July, our insurance positions, PVI, ABI, BIC and MIG, reported remarkable earnings growth in the second quarter with 61%, 97%, 189% and 273% respectively. The positive performance of these insurance positions also translated into substantial stock price increases in July, with PVI, ABI, BIC and MIG rising by 10.6%, 18.5%, 9.8% and 6.9% respectively. As we have emphasized in the previous reports, the insurance sector significantly benefits from the high interest rate environment and the overall recovery of the economy and society post-pandemic. Furthermore, the sector remains resilient during the economic challenges, such as the credit crunch during the real estate crisis, as it has substantial cash in the banking system. Apart from the insurance sector, construction companies operating in the public investment sector are also beneficiaries of the government's deployment of large-scale projects, particularly in highway construction, airports and power infrastructure. A prominent position in our portfolio, LBM, a concrete producer, exemplifies this trend. LBM's net profit in the first 6 months of 2023 surged by 46.8% to 91 billion Vietnamese dong, achieving 90% of its annual target. This is a record high first half profit in the company's history. Operating in the public investment sector gives LBM a competitive edge, as most other construction companies focus on the struggling real estate industry. With Vietnam's highway area in progress, construction companies like LBM are poised to capitalize on the significant opportunities in the next 5 years. While exports experienced a decline of -12% growth in the second quarter, we anticipate a gradual recovery in the coming months. Key markets such as the US, EU, and China faced weak demand due to high inflation in the first half of 2023, leading to reduced consumption. However, as inflation rates in these regions ease, we expect a recovery in construction that will bolster Vietnamese exports. Additionally, China's economic reopening supports Vietnamese agricultural products, particularly rice, amidst the ongoing El Niño phenomenon that has damaged rice production in key rice-producing countries. The occurrence of the serious El Niño phenomenon worldwide has led to detrimental effects on rice production in key producing countries such as India, China, Thailand, and Vietnam. In addition to these climate-related challenges, the cancellation of the Ukraine-Russia grain export deal and India's decision to abandon rice exporting policies have further impacted the global rice market. These combined factors have resulted in a substantial surge in rice prices, benefiting Vietnam as the second largest rice exporter in the world. The Vietnamese rice exports has experienced a significant increase, jumping from nearly $470 per ton in September 2022 to almost $600 per ton recently. Furthermore, the first half of 2023 has witnessed a remarkable acceleration in rice export value, reaching $2.3 billion, which represents an impressive 33% growth compared to the same period in 2022. This achievement is a record high for Vietnamese rice exports. With these favorable market conditions and growing global demand for rice, Vietnam is well positioned to capitalize on its status as a major rice exporter, contributing positively to the country's economic growth and trade prospects. Overall, we observed a slight recovery in the global economy, signaling that the worst situation has passed. We firmly believe that the Vietnamese exports have already bottomed out and will continue to recover in the forthcoming months. Coupled with the substantial public investment package, the Vietnamese economy is expected to witness further improvement in the second half of the year. Well, this is all from me. Thank you very much for listening. You're gonna hear from me again with my August update early September. Thank you and goodbye.